Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, March 18th, 2021. It's about 12, it is 12:25 exactly as I'm doing the video, so we've got about an hour and a half left to go. I wanted to get one out before the market closed today and just share my thoughts. So I'll stay focused on the various asset classes I've been watching lately, which are of course stocks, equities. We'll always do I'll always provide analysis on equities. Crude oil has been on my radar lately, and gold, so we'll cover those. All right, start out with what happened yesterday. We had Powell speak, and he came out, and pretty much the consensus was that he's even more dovish. Yesterday's comments and everything that he said there came across as even more dovish. I continue to maintain, he and I are, odds. I think inflation is a risk and has been. And I also think, with the economy, rebounding and the market up not far off all-time highs, would have been a good time for him to start backpedaling a little bit on his uber dovish stance, but he didn't. So, if you were around yesterday, the market rallied. You probably saw that. This was 2 o'clock. There's the FOMC announcement. There's, Powell started talking, and the Nasdaq 100 ripped up about 2.25%. It was mostly, well, no, not mostly. It was largely techs, and tech's going to drive the S&P. But you can see there, so the Nasdaq 100 ripped up about 2.25, and the SPY ripped up about 1%. And so, at that point in time, you guys probably heard me say this many times over the years. I don't ever react to or I don't read too much into the initial reaction after an FOMC meeting. Same thing with earnings. Kind of wait, let the dust settle, and that's one reason I didn't really see a reason for an update. Nothing changed technically yesterday. Let me go back to QQQ. But now today, here's where I'm going with this. The fact that they faded all that pump, the Powell pump, and then some, tells me this was a sucker's rally. And this is quite bearish because, again, had he come out and said something, maybe started backpedaling, but become a little more hawkish. Hawkish is when, you expect the Fed, if they're hawkish, they're looking to raise rates or taper back, tap the brakes a little is what I was expecting. And they didn't do that. Instead, they went the other way. And the fact that, all that buying has been wiped out today, if you want to play it, day by day, the minute by minute call so far, this is pretty bearish, but nothing huge. Let me just look and stick with the charts. That's where I let the charts guide me. You can sit there and try to hash around all day long. Oh, we have an easy Fed, we have vaccines working, the economy's opening up. And again, that's all. How much of that's been priced into the huge move that we've had off the March lows? That's the $1 million question. And so far, so here's what happened yesterday. It was a non-technical event because that rally, there's that pump. We're on a daily chart right here, and here's the candle. In the update before the FOMC meeting, I mentioned that we had rallied into here. We did that on, that was Tuesday, and again on Wednesday. We tapped that 30-24-65 resistance, stalled there, and had we broken out, that would have been bullish, and if we broke down, which we did, that's bearish. So we broke down, and all we did, all Powell's pump managed to do is just take the cues to a perfect back test of the trend line, and so far today a rejection. Now look, that is, so yesterday, I can't even call it a check mark for the bulls if, again, we're just I'm doing micro analysis, day by day stuff. Bigger picture, again, bigger picture is this. We take out this level, that previous high, that's going to be longer term bullish, and we take out the recent lows, that's going to open the door for a move down to my next target at 283. That's bigger picture. So just day by day, again, yesterday we back tested, and so far a rejection. But the fact that that pump was 2.2% or so in the Nasdaq 100 from the 2 p.m. announcement didn't change anything technically, and again, that's why I didn't post an update. We just parked right on the trend line for a back test. So the breakdown, in other words, right here, the break below the trend line was intact. All right, so that's what I wanted to share there. And then again, as I pointed out this morning on the 60-minute chart, what I've been watching recently, we had a divergent high here, and this started the correction I've been looking for, went on to hit some of the targets, and down here, and that was actually a perfect tag of the target on QQQ daily chart, the first target there. Again, this is the NQ 60-minute. Then, well, most recently here, a lot of lines here. Most recently, we had this 60-minute bearish rising wedge pattern. Again, this is NQ. So the catalyst, when we hit my target on the QQQ daily chart, which was 297 right there, at the same point in time, we had the positive divergence here on the 60-minute time frame of the Nasdaq 100, these futures. That was a catalyst for the bounce, and again, it's the initial tag of a target. You expect a reaction, and that's what we got. That set up this bearish rising wedge pattern. And so if you zoom in real closely, which I'll do here, pull it in a little tighter, the bearish rising wedge pattern was confirmed. We had some negative divergence on it, broke down. There was Powell's pump, took us for a back test, and then rejected. And so far, impulsively rejected. But as I said this morning, we need to take out yesterday's lows. We're starting to crack below it now, not by a wide margin, but if we continue down and we dump into the close today, right now you can see the futures are down 2.2%. So if we go much more than that by the close today, that means we broke support, and it's going to open the door, I believe, to move down here to that 12,704 target. If they can save it right now, I'm referring to the 60-minute candle. It hasn't been finalized yet. This candle could still close on or back above that reaction low. Then, there's still a shot to run up here, and that's still the next resistance. We fell a little shy of it before. So there it is. I'm leaning this way now, and partially because of the fade right there, the Powell rally, today's fade of it. But again, we're at support, and like I like to say, support is support until unless broken. So there's my outlook, and again, I'm still hyper-focused on the Qs, but we'll look at the small caps real quick. And this is RTY, small caps futures. I'm going to pull it in here a little tighter. And just to recap, we had this uptrend line there, put in a divergent high right there. There's your negative divergence. Needed to take out this level, minor support, which we did, moved on down, and had a little snapback rally. So we're in a very near-term downtrend right now. Make no mistake about it. Long-term trend in the Nasdaq 100 or the Russell 2000 is bullish, but the very, very near-term trend right now is down, and that means trend is defined as security making a series of lower highs and lower lows. So should, which I expect it probably will, should IWM take out that reaction low right there, it's going to open the door for a move down here to this target there, about 2264, and potentially down here this second target zone. So that's what IWM looks like, or RTY looks like. And if you don't trade futures, you can use IWM or any of the leveraged inverse or non-inverse. They have non-leveraged inverse ETFs as well. There's IWM on the more significant daily chart. We were just looking at the small cap futures on the 60-minute time frame, but there's that big divergence I've been talking about. It's been building on a lot of the indexes for a while, and IWM, I still believe, should we get another leg down in the large caps, I think this one will play a game of catch up to the downside. So I think there's a lot of meat on the bone, more meat on the bone on the small cap short than on large caps at this point in time. And again, I'm favoring a move to that trend line. All right, let's update crude. Crude oil, nice trade today. Let me grab my CL chart, CL crude futures. And this was our, we got that additional sell signal I was looking for. Remember, I hit this chart, changed a little bit because the futures rolled. On the last version I gave you before, I had some divergences drawn here. Yeah, all those trend lines are gone. So we had that small divergent high right there recently, and there was your sell signal right there, and that was a nice one. So we had that reaction high back there and some support reaction lows there at 73.70 or 63.76. And then I said you take that out, especially that previous reaction low right there, and boom, this is the biggest drop we've had in months in crude. And right now we're coming up on my second target. So there it is. And by the way, we did get the reaction there on that T1 was hit. When you go down to a 1 minute chart today, you can see this is what the reaction looks like. I need to pull it back a little bit. There, that shows it better. That's a reaction. Reaction can come, I define a reaction as either a consolidation or a bounce when a support level is hit. You're going to get a reaction one of two ways. So reaction is if you're falling and you stop, that's a reaction. And if you bounce, that's also reaction. So far, that reaction was more so, as you can see, a clear consolidation, and then boom, once the support level, that first target support level was taken out, crude dropped, and again, it's back to, we'll go back to that hourly chart, coming up right now on that second target zone. And with the downside momentum, I think it'll probably come to the bottom of the target zone, 58, 50, 85. And when you have this kind of impulsive selling, it's easy. You could just trail down a stop. You can do a tight trailing stop, 1-2%, or you can give it a little more room, 2-3%, and hold out. And we might get more than a move down to 58, 85. But as of now, pretty decent support, and I think we'll bounce there or have at least another reaction. So not a bad place to book profits. And you can see again, crude's now down almost 8% on the day. So that's that. There was your sell signal, and you got to act quick on those. You can't hold off too long when you have a lot of crude has really gotten ahead of itself, and that's why I think we could see a much deeper correction. This is what happens when you get a crowded rush for the exits, when shorts have been blown out and everybody's long and bullish, thinking crude can only keep going up, up, up because the economy is coming back online. But again, you have to look how much of it's priced into that huge move it's had off the bottom. And then last but not least, here's gold. Gold on the 60-minute chart had this bullish falling wedge. There was a breakout there. Also took out that 1706, 07-ish resistance. So more than one buy signal, or at least a buy signal with a break of both resistance levels in close proximity. And it's been moving up. As I pointed out this morning, what happened yesterday, we had been pushing along this level right here as resistance, broke out, popped up, hit that or close enough. Again, these are actual resistance levels. You always, if you're planning to take profits or partial or full or reverse at anyone, you want to go in a little shy. A lot of times sellers will step in a hair below the actual resistance level, and I think that's what happened there, but close enough to that 157 target. 1757 target and a pullback. Now we did pull back below that reaction low, but that's not a big deal. We did the same thing right here when we broke out, pulled back a little lower. Most important to me is that the near-term trend remains bullish at this point in time for gold. That's a series of higher lows and a series of higher highs, and that's what constitutes an uptrend. And then of course the case for a long in gold, more so than the 60-minute. The 60-minute chart will kind of give us a very near term, but the longer term case was made on pullback to this long-standing buy zone that I've had here in this solid support level right there at 158. So it's not off to the races yet, but so far so good as long as it remains above those recent lows. I'm still looking for at least still near term and longer term bullish on gold at this point in time. And what I'll loop over to is the energy sector. Of course, with the big move in crude, and it's far from a random coincidence that crude's broken down right when the energy stocks, especially big energy, XLE, that's the main ETF, ran into that big resistance there at 53.61, providing an objective short entry, stalled out there a few days, about a week stalling out there, then triggered a sell signal or another objective short entry when it took out the trend line right there, and been moving lower since. And same with the other ones that I track and trade. XOP, down, you're going to get usually more bang for your buck on the upside or downside when you're bullish and long and correct, or short and on the right side of the trade on XOP, and even more so on XES. So XOP is down 4.4% today. There's your trend line break heading down. I don't see really much support coming up to about 80.35, and then XES down also about 4.3% today, coming up on that 55.44 first target there after also breaking the trend line. So that's that. And what I'm seeing today too to help support the bearish case, a lot of the sectors are coming under pressure. XLK down again. Its tech has been just heavy for a long time now, and going to drag the indexes down when it's down. So there's XLK, the tech sector, down 2.3%. Healthcare stocks holding up at this point in time. So are the financials, surprisingly. But again, they're on the verge right now. You can see here. I need to tweak this trend line. Here's your uptrend line. We'll put it right here. There you go. And let's that one was a breakdown and a back test. So there's your divergent high. Nothing's changed technically except we need to take out that trend line. There's your negative divergence forming right there. I'm trying to put that line where it needs to be. There we go. And so that's it. Set an alert for that. And if the financials break down, you get a big solid red candlestick, especially big close below there. That should take XLF down to at least that 31.35 target. And if you're longer term bullish, the financials, that would be an objective level to go long. It would be a back test of the breakout of that. That was a big level. And that is to me, like a magnet. If we get a sell signal there and we break down, I'd put very good odds that XLF is going to hit that 31.35 target. And to try to quantify it for you from where it's at right now, that would be a drop of about 10%. And so that would also put pressure on the market as well to see the financials break down. There's XLC. XLC is still comfortably above this trend line right here as of now. And XLY, consumer discretionary, already broke down, back tested recently, or near back test there. And that's it. We don't need to cover each and every sector. These are the ones that have the highest weighting. Tech number one, then healthcare, then financials, communications, and then consumer discretionary at about 10, a little over 10%. All right, so that's it. And just to wrap it up, I'm still looking, still leaning towards at this time, and a little bit more today than I was yesterday, because we're rallying up and, it was questionable here. But like I said, based on what happened yesterday and today, and now nothing huge today technically other than a rejection, and that is something. And again, that's why I wanted to get the video out. The fact that we did break down and followed through today helps. And then the next sell signal or objective short entry, I believe, will come on a break below on QQQ below that we'll call it 310 level. And then as I said before, I think if we get anywhere close to those that 297 target that was already hit once, because it was hit once, I think we'll probably see a pretty swift move down with little, if any, reaction on the next tag. Again, if we get near there, we'll probably slice on down through and head to that 283 target there. All right, let me wrap it up, get the video out to you guys in time before the close, and if I see anything else I missed or we see anything big before the close, I'll do another update. This has been Randy Finney with Right Side of the Chart. Have a great day.